We have fresh concerns over China's economy hitting the global stock markets pretty hard this morning. So here's the data that came from China. It shows the country's factory activity contracted for the first time in 19 months last month, as domestic as well as export orders continue to decline. CapitalistPig managing member Jonathan Hoenig joins us now. Jonathan, what a morning. Happy New Year.
Well, yes, Happy New Year.
I know.
Thanks. Great. Yeah, we're ending out, as you said, just as we started. It is a bear market. It continues to be a bear market, although we turn the calendar. Just look at Friday, 150 new 52-week lows, only about 7 new 52-week highs. And as you said, the data from China really having an impact on our own market here. Now, we know that last year the Chinese market the equities market was exceptionally hurt, much more than ours. But this is a global economy, an interconnected economy. So it's not surprised that weak data from China actually is affecting our markets here at home and pretty severely on this first day of the new trading year.
The Chinese market was down about 25% last year, and more signs that their economy is slowing more than ours, but we might not be realizing how badly. The numbers might not suggest how bad their economy is slowing. So how bad do you think it really is? And are you worried that it is a global demand story?
Absolutely. I mean, you can't escape the fact. I think perhaps in the 90s, maybe the early 2000s, investors could benefit by diversifying throughout a country. You know, you thought, well, maybe when China's doing well, the U.S. isn't, you could diversify. That simply isn't the case anymore, Lauren. It is a global, interconnected economy. Now, I personally, knowing China's interventionist policies, I don't trust a lot of their data, especially their government data. But there's no question their economy really stalled and slowed quite dramatically last year, and that is affecting us here at home. There's truly no way to escape it. This interconnected economy, when we invest in the U.S., we, in a sense, take a position in China, in the world economy writ large. And just keep in mind, although we are in a bear market, we're pretty early in the bear market. The average bear market lasts about a year and a half. We're only a few months into this bear market. So we should expect to see some more bad news, not just out of China, but probably out of our own markets still yet before to come, before this bear market ultimately turns bull once again.
Well, speaking of the U.S., we have some manufacturing data of our own today, our PMI for the month of December. We also get the jobs report on Friday. What do you expect from these domestic reports?
It's all about the reaction, Lauren. You know, oftentimes we hear the old saying to buy the rumors, sell the facts. So oftentimes the reaction is what surprises us. What I would like to see, and this sounds a little backward perhaps, is one of these true capitulation days. We didn't really see that in the end of 2018, a massive sell-off where everyone essentially threw in the towel on their equity portfolios. So it sounds kind of backward, but if we saw some bad data early in this year and saw some real negativity, true negativity creep into stocks, we could hopefully build a base and start moving higher for 2019. It's early yet, as we know. It's early in the trading year, but we're starting out on very much the same weak foot that we ended in 2018.
What would that capitulation day look like, though? Because a lot of folks, Jonathan, were saying that the meltdown that we saw, the Christmas Eve meltdown, was the low of the market. We had that massive rally the following day. What do you think capitulation looks like? How low do things get? Because it looks pretty ugly this morning. Dow's down 1.5%. Nasdaq's down 2.1%.
Yeah, it really does. Although, you know, Lauren, we've come in the last, the fourth quarter of 2018, a couple hundred points in the Dow. It really isn't what it used to be. We've come very accustomed to that. But, you know, when we're talking about a capitulation, we're talking about a day, you know, I'm not wishing this on our market, of course, but, for example, where we close down 1,000 points of the Dow, et cetera. We haven't seen that yet. We might not see that yet. But the fact is that the weak data from China certainly impacting us here at home, despite the fact it's many, many miles away.
Plus the volatility that has become the norm.
Yeah.
Jonathan, thanks for kicking 2019 off with us. Hopefully,
of course. Thanks,
better
Lauren.
days ahead.